Hello again, everybody. It's Harry Box for the Technical Trader at thetechtrader.com. It's Thursday, the 22nd of September, 92222. And dire times in Wall Street. As you know, the markets have been plunging of late, especially after the interest rate raises again. S&P 500, you can see from these hourly charts, has dropped from 43.20 to 37.50. That's a huge drop, and it doesn't look done yet. If you take a look at the angle that I've drawn, I'm thinking that this is the internal trend line, excuse me, that's causing the market to be drawn down into this area. I don't know if the lows here are going to hold. There's some support, excuse me, there's some support at 37.20. Beneath that, what I think might occur, if the length of this wave and the length of this wave are equal, it could be down around 36, 60, 70 zone. That's another upwards of 100 points more on the downside. I would like to get it fast and furious and get it over with, but of course, the market doesn't always accommodate. The NASDAQ 100 has dropped from over 13.7 to 11,450. Obviously, huge drop, and you can see that the wave length and the angle of descent is now showing the possibility that we plunge down towards 11,100, 11,200, maybe lower, but it just depends on how they want to do it. In other words, whether it goes straight down here and then bounces, or whether they get a bounce first and then go lower, which can mean under 11,100. And the S&P, the same thing occurs. If it comes down in this range and bounces and goes up there, then the plunge could take it at 36.50 or less. It doesn't appear to be over, but I will tell you that some of the oscillators are getting oversold. The closing McClellan oscillator today, minus 195. And at one point, you can see it got up to, what was the low today? 200, 202.50. Reached that level twice. Now, in the course of events, the oscillator has been in the zone and caused a massive rally back on several occasions in the last couple of years. But there has been occasions where we went minus 300 or so. Nevertheless, we're getting close to a bottom, but I'm not sure if it's a 1 day, 2 days, 3 days, something like that. And I think we're going to get a rally back, but it's right now the market's in a very negative posture. The VIX just can't go in though. It's really amazing to me that with the way the market's being feared, that we're not seeing this up in the 30s and 40s yet at this point. It may happen yet. What is deteriorating is the percentage of stocks above their 40-day moving average. Check it out. It's down to 16%. At one point this morning, it was under 14%. That means 86% of stocks basically are under the 40, which is a definitely bear phase. But we've seen this plunge into the high single digits first. So we're not there yet. We're getting close. I'd like to get it over in one day, of course, but wouldn't we all like to get it over with? The deterioration is pervasive. Today, we're going to show you the swing charts of the last few weeks, a couple months, and also some shorts that have been ongoing. And I've been remiss in giving you new shorts, although I've mentioned lots of them. I've never actually issued any. And when you look at my short list, you'll see what I mean. We'll start off at AEHR, which still is holding on, is acting great considering. Look at the underlying technicals as well. But I just don't want to see it underneath 14.5, because at that point, you're probably looking at 13 or less. APRN has been stopped. Take a look at this drop. First of all, explosive move, held twice, and then this is the move where we really made money on it. 4 3/4 to 822 in a week, only to reverse hard and come down. Breaking support, moving areas as a trend line, that's been stopped, but I wanted to show it to you. ARQQ broke out, issued a swing, and went up to the target, number 1, and pulled right back. It's actually below initial support. I think it might have been stopped already. I'll have to look at the numbers, but you can see how it is now down below support, as are many stocks. Axsm, for example, major breakaway move, beautiful multi-week consolidation, and then a big spike up. This stock went from 35 to 72 in 4 weeks, including a breakaway gap above that ascending triangle. Formed the beautiful bull coil, looked like another wave was coming, but the market dragged it down. And right now, it's right on or near the support level that would trigger a much bigger decline if it falls any further. Blue, beautiful breakout of an inverse head and shoulder here. Ran up to target number 1 and pulled back from the wedge and then broke out again, looking like it was headed much higher, but the market dragged it down. It's on support, but you're going to have to stop this under 540.45. I do not want to below that, then it becomes dangerous. CANO, good news today as their merger rumors flew and the stock late in the day. Take a look at this. Exploded from about the 575 range all the way up to 9.5, literally in minutes. Finished after hours at around 9. But this breakout of a rounding base pattern is what I had in mind when I saw it. And my first target was about 10 and then 12. We'll see if we can get there on a takeover. That's what it appears to be underway. CHPT looked pretty good when it broke out of the wedge and it ran up to a new high. Didn't quite get to my target of 20. It reached 1992, pretty close, and then pulled back. Right now it's on the trend line at support. Any further damage, it's a stop. DraftKings similarly held support, broke out, spiked up, rolled over. My target was 21. It reached 20 or 19.75, so not quite. And now it's way off. I'm not sure if that can be considered a trend line now, but either way, keep your stops under 15 on this one. New short we put out today, Dollar Tree, obviously got hammered from the big wedge, and it looks to me like this is only 1 and 2. 3, 4, and 5 could be underway. This stock could be down to 100 in the next few weeks if the market cooperates on the downside, of course. ESPR, still holding on, but barely. It broke out, it ran up, it coiled. I would think key support now is about 680, 85. It's pretty close. Any further damage, and you're probably going to test the trend line at 640 or worse, so be careful. FREY, beautiful explosive move in the last couple of days. It popped yesterday morning, 13 to today's high at 1657, and then with the market pullback, it reversed, but off the top of the trend line, so that would have been natural anyway. It's a 1, 2, 3, 4, 5 wave move, so be careful up here as it's had a big run from 6 to 16 and change. It might be due for a pullback or consolidation. INVZ, nice base pattern, broke out, pulled back in a falling wedge, held the moving average, lateral price support as well, and the gap, and that's why it ran up. And what it did, it appeared to have broke out yesterday, or at least reached the 620 target and backed right off. Today's loss about 6%, still above support and still in play. MAXN broke out, we put a swing on it from the wedge and broke out again, ran to a new high. This was acting great, almost 28 from 16 in 6 weeks until today when the market broke it, along with lots of other stocks. Usually what happens is at the tail end of every decline, the strongest stocks give way. And hopefully that's the case here. But we'll have to see if it's able to hold support right in this zone. I don't want it any further than that, ideally. NTNX broke out with a breakaway gap and formed the coil, or a little wedgie. We put a swing on it. It got to resistance and backed off. I'd like to see it hold 21 in that area, which is your support, because if not, it may fill the gap or worse. Nevertheless, on a longer term basis, I'm looking for high 20s. PAC broke down today, it appears. It may be headed for a test of the early September pullback low, which is down around 5. But below that, it's a must stop. I'm not happy with the pattern. After looking at this, the fact that inverse head and shoulders, it still might be. If it holds it right here, may not be likely. PAG Seguro broke out. We put a swing on it and immediately backed off. And today broke the trend line and lateral price support right there. So probably stopped at this point, or should be. PERI as well. Looked like a breakout there. I attempted to, actually did break out nominally. Tried again twice and then backed off. At this point, despite the fact that I like the story and I like the company, this must be stopped under 19.5. Plug had a nice consolidation going. Looked like it was going to break out a week and a half ago, but boys, it rolled over. Unable to get back to 30-31 zone. It's now plunged below the moving average trend line and price support. and it's been stopped. Roadblocks. Breakout here, ran up to the target zone twice, the two of them, and then backed off, snapped back beautifully. But boy, zipping down hard 6 days in a row from 47-ish to 35, lost 12 points, and has been stopped. Folks, just want to point out that the purpose of stops is to avoid big losses. And so sometimes at the tail end of every market, when you're going long lots of stocks because you think the trend is reversed or it's continuing higher, and it turns about on you, then that's the reason why you got to be paying close attention to all your stops. And this was not a swing trade, my apologies. SRTS is a new one that was looking great only 4 days ago, traded at its multi-year high, 1517, looked like it was going to blow, but it backed off with the market. At this point, the angle of ascent tells me it may need to pull back into that zone, right about where it is, or a little less. In any case, the stop is under 11.75. The resistance is 15.25, and your target is going to be 20 or better eventually. We'll see what the market holds with this one. And finally, Uber on the long side broke out, put a swing on it, ran up to the target, and backed right off, and today got hammered back for about 6%. Must put a stop there. Perhaps the channel's there. This is the more parallel line connecting these bottoms, so easy to stop this one under 27.75. You're out. It's not. We don't have much leeway on that one. I'm going to show you some box of shorts that have been ongoing for a while. A line right when it broke down from the head and shoulder pattern and then rolled over, formed the 1, 2, 3, 4, 5 wave decline. It kept going down. Today breaking more on support on the downside, right there. It looks like it might be headed to 175 or even lower. CDNA, which you put out, when it cracked back almost a year ago, about, let's say November of last year, formed a wedge and just kept stair-stepping its way lower, unable to get back above the declining tops line and making lower lows along the way. Next target, 14. Dollar Tree, which we just put out, your targets are 127 and 115. FVRR has been a swing trade on the short side ever since it broke down here. And it's been dropping from the 130.40 range all the way down to under 30 and maintains, looks like a base pattern, but over the last few months, it's now in jeopardy of a breakdown from this base, which could drop it precipitously or even further. I would say perhaps down in the mid-teens. MEDS, Medifast, I should say, MED, broke down from the bear flag. That was the short point of 220. It subsequently dropped to 114. This one looks like it could be rolling over hard into the mid-80s if the market cracks here. Overstock broke today as well, a triple bottom. It's in a 1, 2, 3, 4 wave decline. The fifth wave is due. I'm looking for high teens, maybe 17. PNR broke down from the bear wedge. Another one. Looks to me like a swing in order to the mid-30s. 6 more points. QDEL broke down, rallied, and formed the big coil before breaking down. Your next target is 60. Swing trade Robert Half on the short side. I gave it to you when it broke down here at 99. It dropped into the low 70s. It consolidated. It looks like this consolidation pattern, the entire 3 months of it, has now been broken, with targets now at 68, 64, and 60. The Shutterstock, which was a tech trader swing short way up here at 115, made it all the way down into the 40s. Right now, your next target is 45. Upwork, which has been down work ever since it broke down in front of the bear flag in the mid-30s, has dropped into the mid-teens, and my target now is 11 on this one. And finally, Zoom Video. I've been watching this on the short side for a long time. It is not currently a swing, but it could be, and my target on it's going to be in the mid-50s. I wanted to show you a few additional shorts that maybe aren't active swings right now, but probably should be and might be going forward. The problem is, I think the market's close or getting closer to a bottoming pattern, which may preclude any additional shorts until we get a rally back or a better setup, I should say. That's it for tonight, everybody. Have a great evening. I'll talk to you tomorrow. TGIF.